We'll start off with the source documents that are created for cash transactions. So we can see the two types of documents there are cash receipts and check butts. So with cash receipts, every time the business receives cash, it must issue a cash receipt. So someone gives us cash, we send them a receipt. Someone gives us cash, we send them a receipt, and so on. And then what's important to note is that we learned in the previous lecture that the original will go to the customer or the person who is the buyer. In this case, we're the issuer, so the business will keep a copy of that receipt. The different situations where we might need to issue cash receipts could be for selling goods and services and charging GST. We'll give those people a receipt, and again they'll get the original and we'll keep the copy. Could be a debtor paying us back and we'll give them a receipt and we'll keep the copy. It could be the owner starting a business, and even though the business is getting money from the owner, you've still got to issue a receipt, and the owner will have a copy of the original and the business will file the copy. And it could be getting money from the bank in the form of loan or interest. Just looking at a typical cash receipt, the things you want to look out for is the name at the top will be the name of the seller. That's the person who issues the document. The name underneath will be the buyer or the person who is actually being issued the document, usually the customer. We've got a receipt number. Each receipt should have a distinct number. We've got the date that it was issued. And looking at the details, we should always look at what it's for. So the receipt on the left is for a sale, and the one on the right looks like it's a debtor paying us back money. And lastly, the total. So we can see not only the actual total, but also if there's any GST in the transaction. Looking at check butts, every time there's a cash outflow, we're going to say that is paid by a check, and the business gives the check to the other person, and then we'll actually keep the check butt. So we'll look at what a check butt is in a second, but for now we send the check to the person or the other party and we keep the check butt. So for each transaction that we pay, send the check to the other party, keep the check butt as proof. Send the check to the other party and keep the check butt as proof. Just looking at some of the situations we'll need to issue a check for, we'll have paying expenses with any GST on top. We'll have buying assets and any GST that's charged on that. We'll have paying back creditors, the owner making drawings, and repaying any loans that we may have as well. Looking at a check and a check butt, obviously not a common form of payment in the real world, but in Year 12 accounting we're going to assume that all cash payments are made via check. So the part on the right is called the check itself. That's the bit that we tear off and give to the other party as payment. They're going to then go and deposit that in their bank account. What we'll keep is the check butt, the part on the left. So we keep the original of that document, and that serves as proof of that transaction. So looking at the important info, we should always have the date on both parts of the check and the check butt. Who is the party being paid? So in this case, Central Plumbing Supplies. The amount, and it should be written in words and also in numbers on the actual check itself, and the check number. So we'll need to record the number of each check that we send out.